Good evening, good afternoon, good night. You're watching CryptoBanter.com, the world's only streaming live crypto call-in station. We are here to give you all the big calls and to help you make money right now, live on air. Is it too late to buy Bitcoin? That's the question that most crypto enthusiasts are being asked all the time. Today, we're going to look at the technicals, the fundamentals, see what's driving the price action. We're going to look at who's buying, who's selling, and of course, what the charts are predicting, because one of the indicators in the chart says that there's going to be a big breakout soon, but which way is it going to go? In other news, Kevin O'Leary, or Mr. Wonderful, has been wonderful to the Bitcoin community by saying that he would invest up to 5% of his wealth into an SEC-approved ETF. But how realistic is an SEC-approved ETF, and how long will it take? Today, we're going to look at all the facts and figures that may drive an SEC decision. In other news, MicroStrategy announced that they bought $50 million worth of Bitcoin at $19,400 a coin. Is Michael Saylor taking this too far for a listed company? Is he going to be remembered as a legend, or is he going to be answering to lawsuits for the rest of his life? And then, of course, moving away from Bitcoin, we move into DeFi. Like it or not, DeFi is now approaching 1 million users and can't be ignored. But what should you be looking at? What should you be buying? What should you be farming? And what should you be selling? All that tonight in a big panel around the 1 million users on DeFi with two big guests. We're also going to look at the top 5 picks of the week, the top 5 trades of the week. Now, if you watched our show last week, we called Cover Protocol, we called Pickle, we called RSR, and all those ones doubled. We called Sushi, and Sushi had a huge run. Today, we're going to be looking at the top 5 trades of the week from our biggest traders to find out what it is that they're buying and where there is money to be made. Then we cross over to Korea, to TERRA Labs, the guys that bought you Terra Luna money, to find out what they've just launched. They've launched an amazing new protocol which trades synthetic stocks. You're watching CryptoBanter.com.
Crypto Banter is the world's first interactive social cast for the crypto community. Get the latest news, views, interviews, and live conversations with crypto enthusiasts from around the world. This is where you call in, you make the show, and you bring the banter. That's CryptoBanter.com, where you talk crypto.
That's it. You are listening to CryptoBanter.com, the only station which allows you to call in and talk crypto live. And if you are watching us on YouTube live right now, hit the like button and hit the subscribe button now, because the more likes and subscribes we get and the more times you hit that bell, the more the YouTube algorithm sends our content to crypto enthusiasts from around the world. The bigger the show becomes, the more trading tips and advice that you can get. And remember, this show is made for you to call in. So if you do want to call in, you can either call in on any one of these numbers on the screen, or you can go to the YouTube and there's a StreamYard link which connects you direct to the studio and allows you to join our show live, speak to our guests live, and actually just banter. Guys, we need you guys to call in, because what we're trying to build is a live 24/7 crypto calling station made for serious traders like yourselves. Guys that need live information to make trades here and now, not guys that can watch podcasts and use the information 3, 4, 5 days old. So without any further ado, we're going to start off today's show and we're going to ask the big question that crypto enthusiasts from around the world keep getting asked. Now, I don't know about you, but every single person that I speak to keeps asking me whether now is a good time to buy Bitcoin. And of course, if you look at the charts are saying that something is about to happen. There's a descending triangle or an ascending triangle, and it looks like Bitcoin is about to break out. But which way is it going to break, and what are the fundamentals driving this break? Is it the buying pressure? Is it the buying pressure from people like MicroStrategy? Or the talk of buying strategy from people like Kevin O'Leary? We're going to find out from Kevin. Kevin, welcome to the show. I know you've done some amazing research on Bitcoin. It's such a pleasure to have you back on the show. Kev, I have been following your Twitter account for ages. I think since you had about 2,000 or 3,000 Twitter followers. And every tweet that comes out of your account is well researched and adds a whole lot of value. And in fact, always helps me make trading decisions. In fact, I often, before I do a buy or a sell on Bitcoin, I often go to your account and I look to see if you've dug up any nuggets and whether or not I'm making a mistake. The thing I like the most about your account is that you're not one of these guys that takes the charts and draws the lines on the charts. You actually take it a step further and really do a whole lot of research to back your calls, right?
Well, I mean, I think I'm out of luck with the chart drawing. I don't really know how to do it. And so I don't pretend to know how to do it. And it leaves me to, dig through filings and find interesting nuggets that other people aren't looking for and that you'll never find on charts.
So what do you look for? Where do you analyze? What is it that you actually go out and look for?
Well, so I think of Bitcoin right now as the stuff that drives Bitcoin today is not what drove Bitcoin in 2017. So in 2017, some of the important metrics that we were looking at were on-chain metrics, were retail adoption, we're trying to figure out how many users exchanges had. All these metrics that were important then, I don't think are going to be the ones that are important in this phase, in this 2020 cycle, right? Right now, the market cap of Bitcoin is so large that it doesn't really matter if Coinbase added another million users. It doesn't really matter that there are more active addresses on the Bitcoin network. They're helpful, they're good, but they're not what's going to drive Bitcoin to the next level, right? People talk about this 50,000, 100,000, whatever their price targets are. They're not going to get there by adding another million retail users, right? So I've kind of shifted my interest towards public markets and looking at what either institutions are thinking about doing, thinking about investing in, what public companies are holding as a treasury reserve asset. These are the kinds of things that have a meaningful impact on the price when Bitcoin is now a $300+ billion asset.
So we always said that the big run will happen when the institutions come into Bitcoin. And it looks like truly now, for those of us who've been around for a couple of years, it really does look like now is the time when the institutions are coming in. In the last bull run and all the way up, they sent out all the right smoke signals. Banks said, they were building custody solutions. Insurance companies said they were looking at insurances. Lloyd's of London started to insure crypto. But it does look like now they're putting their money where their mouth is. What are you particularly looking at? What are the ones that really stick out for you?
Yeah, I agree. I think the infrastructure is being built, and this time for real. And it's kind of we've gone through a few years of building, and now we've gotten to the point where it's usable. A lot of the institutions that couldn't access the market in 2017 now have different avenues to get exposure, whether that's through buying physical Bitcoin and custodying it with some provider, or taking the route of buying GBTC and just taking that securitized version of Bitcoin. So what I'm really looking at though is the absolute numbers of Bitcoin and the value that they're purchasing, right? These are the things that are going to drive prices from this point forward. I don't, we've now had enough news of institutions are thinking about buying. We have enough evidence that there's interest. Now we need to see actual, purchases. That's going to be the driver for the next 6 to 12 months.
Yeah, I guess it's enough talk. Let's see you put your money where your mouth is. And I guess the first person that went publicly and went all in on Bitcoin must have been Michael Saylor, and taking MicroStrategy in two big purchases, one for about $500 million. And if I remember correctly, the average price of that was at about $11,000 to $11,500. And then he announced last week that they bought an extra $50 million. And this time they paid about $19,500 per Bitcoin. What do you make of this move?
Yeah, so well, the MicroStrategy was actually 3 purchases. So they did 2 in the beginning. Those were 2 separate purchases. The first one was, I believe, $250 million. The next one was 175, and that combined for 425. So they had 425 million in a few weeks. They had put that money in. And
Yeah,
then,
100%.
price rose. Michael, is now, he's been proven to be correct for this first purchase. And now he
Let's have a
steps
look at
in.
something. Let's have a look at something. So I pulled out this chart of the share price. And if you look at the share price, the MicroStrategy share price has, well, it started at 120 and it's now at about 320. So about 2.8x increase in share price. Now, this is an established listed software company. So this is not, buyers getting excited about the software product. What the market is telling us is that they're excited about the fact that he's buying Bitcoin.
Absolutely. Yeah. And one thing that, that chart brings up some interesting ideas. There are another dozen or so companies that have Bitcoin exposure that are public companies. And these are sometimes mining companies. There's sometimes funds. There's all kinds of different companies that have Bitcoin exposure. I'm tracking how much Bitcoin they have versus what the value of that business is. And, each company has their own, has a different set of operational risks and a different business model. And, it's not really a perfect comparison to say, oh, MicroStrategy has, now $800 million of Bitcoin on their balance sheet and they're worth $3 billion. That's too much, because they do also have a software business, right? So, but you're starting to see that expansion, right? You're starting to see when they first purchased their $425 million of Bitcoin, they were worth about $1 billion as a company. So they've transitioned now half of their capital, or I think that was about 80% of the cash they had.
That was about 80% of the treasury. And that was what made it such big news, that, they took 80% of a listed company's treasury and effectively put it in Bitcoin. Now, the question that a lot of other journalists were asking was, is this now becoming a Bitcoin hedge fund play as opposed to a software play? Because the value that the Bitcoin purchase has added to their market cap it makes their previous market cap and their earnings related market cap and their software business market cap almost like not really relevant. So I guess what investors are doing here is they're saying, look, we know Michael Saylor, we like him. We've looked at MicroStrategy. It has relatively stable earnings, but now we're getting a software company and we're getting a lot of exposure to Bitcoin, and we're not paying a grayscale premium on this. So, is this one of the ways to get exposure to Bitcoin for those that don't want to hold keys?
Now, I disagree about the premium part, because, if you subtract away what they have now, they're $800 million of Bitcoin, roughly. So take $800 million off their valuation. That puts them at $2.2 billion. And that's more than double what they were before they announced Bitcoin, right? Okay. So like if you took away all their Bitcoin today and you took $800 million off their valuation, if you assume Bitcoin is worth $800 million today, you'd still have a company that's worth now double what it was worth 3 to 6 months ago.
Don't forget though that the original $425 million in Bitcoin has already doubled. So that's already worth almost. That's already worth $800 million.
It's about 700 million. So that's 700, 750, and then they added another 50. So that gives you 800.
Okay.
Right.
Gotcha.
And then that 800 right now, that's what it's worth today, right? You subtract that out.
What's the market saying to us about Michael Saylor and the MicroStrategy strategy? What are they saying? Are they saying they like the software company? Are they saying they're just willing to follow Michael Saylor blindly into whatever he does? That's how much they like him and trust him. What's the message that the market is giving us by sending the share price up like it has?
Well, I don't think it's a specific MicroStrategy statement people are making. I think this is just the market searching for Bitcoin exposure, because there's a dozen other companies that also have Bitcoin exposure that are trading at 3, 4, 5, 6, 7 times the value of their Bitcoin on their balance sheet. And sometimes these companies don't have much in the way of operations. Sometimes they're very low margin crypto mining businesses. Sometimes they're funds. There's a lot of companies right now that are trading with valuations far higher than the Bitcoin on their balance sheet. And I think this is the market's just trying to figure out, how do I get access to Bitcoin for the least amount of either hassle of custodying it yourself or the smallest premium.
All right. So when you look at the market, I know you've done a lot of research about who's buying and who's selling. What sticks out to you about the buyers and the sellers? And if you want to share your screen, let me know. We can share your screen if you've got anything to share with us.
Yeah, I don't have anything on my screen right now. But I think when I look at, I follow Grayscale's fund every day and their movements. Right now, they're still bringing in, 1,000 to 2,000 Bitcoin a day. They had a day last week where they got about 7,000 Bitcoin added to their fund.
We covered that last week. We covered that day last week. That was a huge day. Can we talk about Grayscale for a second? Because I need to understand something. There's Grayscale, which has these trusts, and these trusts effectively have Bitcoin, Ethereum, Litecoin, and a couple of others, all separate trusts. Now, these trade at a huge premium. I mean, if you looked at the Ethereum premium has gone between 50 and 100% for a while. The Bitcoin premium hovers at between 15+%. What is the market telling us? Why is this premium around for so long? How come this arbitrage hasn't closed?
I think it's just there's a desire for Bitcoin, and it's a consistent desire, and it's clearly a problem that has not been solved for a lot of people. They want Bitcoin. They just don't know how to get it. They don't want to custody it themselves. They don't want to learn, about private keys. I mean, I saw the segment you guys introduced with today about Kevin O'Leary putting possibly an allocation of his portfolio only if it was a Bitcoin ETF, right? Like, so he's not looking to hold on to a ledger or a Trezor and put a bunch of money on it. He wants something that is regulated and something that he can access in equity markets.
Yeah, okay. I mean, I hear you, but what I'm not understanding still is what justifies this premium. What I'm worried about is that we know that accredited investors and institutions can buy from Grayscale directly daily at the net asset value of the fund, right? Yeah. And they get their shares 6 or 12 months later in terms of the US legislation. And then what they do is they dump these shares on unaccredited buyers for a 15 to 20% premium. So it seems to me like what's happening here is the rich, the institutions, the guys that are accredited are buying this, and they're dumping this in the open market on unaccredited investors, and therefore unaccredited investors are eating up a huge premium. Now, the 10, 12, 14, 20% on Bitcoin is not that crazy. But when you look at the Ethereum premium and you look at the Litecoin premium, that's crazy. That can only do damage. One of my concerns here is that it's all great in a bull market when the demand for Bitcoin is insatiable, when the demand for Ethereum is insatiable. What happens in the bear market when people want to sell and there are no buyers?
I agree. There's a lot of confusion about some of those. I think it may have been in a previous year, but I think there was a time when the Ethereum trust was actually trading at the value of 1 Ether, even though it was only backed by like 0.1. There was a really bad time where it was like 10 times the actual value of the underlying Ether. And yeah, I think, you got to be careful. You got to watch out and know what you're investing in. And there will be premium compression for some of these, triple digit premium funds right now. Even some of the double digit ones. If we have a sign of an ETF or something like that, you're going to see, I think, a lot of easier opportunities for people to access Bitcoin, and they won't have to take these roundabout ways of either buying MicroStrategy or buying, Grayscale at a 25% premium, or I think people are going to have easier ways to access a securitized version of Bitcoin. And yeah, I think that's when you start to see premium compression.
So let's look at the likelihood of the SEC approving a Bitcoin ETF. As far as I'm aware, Hester Peirce, who loves crypto mom, as they call her, she's now moving up the ranks. If I'm not mistaken, she's becoming one of the senior people, if not the head of the SEC. She's very much pro-crypto. She came out and she wrote against the SEC decision, even though she was one of the people on the panel that made the decision. she said she voted against. I mean, do we think there's going to be a Bitcoin ETF soon? And when I say soon, in the next 12 months?
I don't know about timing. That's a little bit outside of my wheelhouse. I think it's a when and not an if question. It'll happen, but yeah, I think timing is where I start to get into trouble. These kinds of decisions involve a lot of people, and they're more complex than what I understand. So yeah, I'm happy to sit on the sidelines. I imagine it's coming. All signs point to, all the companies in Bitcoin are regulated. All the exchanges, we have good banking relationships now. We're starting to see regulators take a positive tone when they talk about Bitcoin. There's a lot of good signs, and I think SEC approved ETF is somewhere down the road.
I just want to remind our viewers that if you are watching this on YouTube, hit the like button, hit the subscribe button now. We're having a great discussion here about Bitcoin and about who's buying Bitcoin in institutional circles. If you hit the like button and you hit the subscribe button, this content gets shared. And you guys are an amazing community. You've helped us get this far. We keep doubling our views, keep doubling our growth. And in time, we'll build you guys a 24/7 crypto calling station so that you'll have data to trade on. But please hit the like button and hit the subscribe button. Kev, other than MicroStrategy, who else is making big waves in the Bitcoin community, in the Bitcoin circle?
Well, I mean, I think one thing that is not fully appreciated by people is that buying Bitcoin, if you're a public company, is a 6-month process. I think that's something Michael Saylor said on one of his interviews he did when he first made his first 2 purchases. It's not easy. You got to get board approval, shareholder approval. You have to, you have to file SEC letters, amendments, depending on what kind of company you are. You have to then find an OTC desk willing to help you make this trade. You have to figure out custody solutions. You have to figure out if you need insurance, figure out what kind of Bitcoin are you buying. Is it physical or is it a securitized version? So I think this really is a 6-month process for any big players. There are smaller companies who are more nimble and maybe don't have the same regulatory scrutiny of a company that may be listed on the NASDAQ or New York Stock Exchange. And they can kind of move within weeks or maybe a couple of months. But yeah, I say sit back and watch for the next 6 months. I think you'll see a few more names, really important companies start to take allocations. It's just
in the US,
it takes a bit of time.
In the US, buying a toothbrush is very tough because there's so many regulations about everything. We're limiting this discussion to the US, and we're limiting this discussion to US companies that have bought some of their, or put some of their treasuries into Bitcoin. Are you aware of this happening anywhere else in the world? I mean, surely there are companies in Asia or companies in Europe that are doing exactly the same thing. I can't believe that it's only a US phenomenon and it's only MicroStrategy that's doing this. Have you seen this trend anywhere else in the world?
Yeah, absolutely. It's not just a US trend. It's Canada has an ETF or a Bitcoin fund that trades on, I believe, the Toronto Stock Exchange, and it's I think doubled its holdings in the last month or 2 months. So it's now got about 16,000 Bitcoin under management. It was up from 7,000 or 8,000 just about 45 days ago. And there's another one in Europe called ETC Group, and ETC Group they're adding a few hundred Bitcoin a day to their fund, and there's also CoinShares, which is roughly flat. It doesn't seem to be adding too much. Definitely not nearly as much as the other 3 funds: Grayscale, 3iQs, Bitcoin Fund, and then ETC Group.
So I also noticed that in Canada, Ethereum ETF was approved, or an ETH ETF was approved. Is that a reality, or?
I'm not aware of a Ethereum ETF. There are a couple companies that hold a lot of Ether on their balance sheet and they kind of act like one. There's one company that's public on the TSX right now that has, I think, 90% of its assets, and it's really just an investment vehicle, but 90% of its assets are Ether.
All right, Kev, when you look at the crypto market, are you only looking at Bitcoin, or are you also paying attention to Ethereum? And the reason why I ask is because this weekend there was a headline that said that DeFi now has about a million users. The growth is from 10,000 users about a year ago to a million users same time a year later. This reminds me very much like the growth in Bitcoin. In fact, it's kind of happening even quicker.
Yeah, I mean, I'm watching everything. I pay a lot of attention to Bitcoin because I have a lot of confidence that it's found product market fit, that it's going to be around for a long time, and that it's really valuable to a lot of people. I don't have the same confidence for a lot of other projects yet. That's evolving all the time, right? It ebbs and flows. Back in 2017, as I was learning about the space, I thought everything was the next great thing, and turned out that a lot of things were not the next great thing. And so, I'm just trying to learn and just trying to figure out what people actually need and what people are really valuing versus what they're speculating on. And right now, I think Bitcoin is like an asset that people absolutely need and are showing a need for, especially with the macroeconomic climate. I don't think people have that same burning desire for a lot of other assets.
Yeah, I guess that's the view. Michael, you've joining the show now. What do you think of the thesis of these institutions buying Bitcoin? Is this what's driving the price up? Can we expect much more of this?
Well, I think we actually needed those institutions to come into the markets, and right now we're seeing more and more of them buying up Bitcoin or allocating money towards Bitcoin, which is actually what's going to fuel the bull run in itself. However, I do agree. I just heard something about Kevin O'Leary, which is actually a great example of one of the big hurdles of Bitcoin at this point. Is it's quite hard to liquidate billions of money in Bitcoin, or several hundreds of millions. That's quite hard to liquidate if you're just using Bitcoin as spot. So that Kevin is saying that, you can imagine that the majority of those investors are looking for vehicles or instruments to buy Bitcoin on a regulated instrument like an ETF or whatever. So if that is going to get approved, and we know that there's an index coming up from the S&P, the Dow Jones in the next year, if those things are getting along, I think then we're just at the start of a big snowball effect where everybody's just jumping into the markets. And that's actually quite good.
Are you also looking at trends? What specific trends are you looking at when you look at the movement in Bitcoin, the movement in crypto? What are you focusing on?
Well, my main focus is data. So I'm using literally the charts and on-chain metrics and just price action in general to see where we're going. Like if institutions say that they want to buy cryptocurrencies, they have a narrative that why they are saying it. So they want the price to go up, otherwise they are not saying it. So I'm trying to stay away from all these news factors, as everybody's FOMOing on the news. And I'm trying to use data in itself to trade on and invest on. But for Bitcoin in itself, that is going to be very, very bullish for the coming years with all these institutions jumping in.
All right, Michael, can you show us some of this data that you're looking at? Can you show us what these metrics look like? Because it sounds good, on-chain metrics, etc. But I think our viewers really want to get into your mind and understand the type of analysis that you look at. And maybe we can even have a chat with Kevin, because I know Kevin's doing a lot of this research, and see where we're taking this. I'm going to, if you want to share your screen, just before you share your screen, I just want to remind our viewers, guys, please, if you're watching this, hit the like button now, hit the subscribe button now, please. If you do, it gets our views up. If it gets our views up, we get our circulation up, and then we can bring you more live crypto content. And our aim, of course, is to bring you 24/7 live streaming crypto content from the community. Also, this is a call-in show. So if you want to call in, the StreamYard link is at the bottom of the YouTube description. Hit the StreamYard link. That will bring you directly into studio. And you can join us and our guests and have a look at what we're looking at and have a banter with us. Let's just talk crypto. That's what we do all day. We should just do it right here on CryptoBanter.com. All right, Michael, take me through what we're looking at here.
Well, I don't have any on-chain metrics ready at this point, as I prepared anything related to trading, and everybody that knows me knows that I'm using all these charts, with very nice information for my trading in general. But I wanted to pick this one as it's showing the relative correlation between the weakness of the dollar and the Bitcoin reaction to it. So the orange color is actually showing Bitcoin in reaction since the coronavirus pandemic had occurred in March. We also see that the dollar is just weakening, and that's driving all the asset prices up. We know that quantitative easing policies are occurring, right? So that's why the dollar in itself is weakening, and that's why Bitcoin is going relatively up relatively fast. So this is one of the things that I'm looking at. The moment that the dollar is going to bounce up a little, which can be through a vaccine or no policies anymore, or a weakening sterling, which is actually the case today, or a weakening dollar, the dollar is going to bounce up. Could react to the markets in general. This could bring the Bitcoin price down a little bit, and Bitcoin price went vertical in itself. So this is one of the things that I'm looking at. From an investor's perspective, I'm looking at on-chain metrics, which is showing that there is a big outflow of Bitcoin, which is meaning that probably investors are going to hold it for the long term. What we also saw is that early Bitcoins from 2011, 2012 are all of a sudden waking up, and they are the sellers in the markets right now. So that's the market reaction. So I'm using this.
Is that a good? Is that a positive sign that the old holders, what we used to call whales or OGs, is it a good thing that those guys are finally releasing their big holdings into the market?
Well, it's the beautiful concept of Bitcoin, right? It's the transition of the early investors and the maximalists transferring it towards adoption and the big guns. So it's just the next phase. So I think it's a bullish thing. Or at least I would say it's a bullish thing. The market is not going up if all those big institutions are not jumping into the market. Retail FOMO is nice. You've experienced it in December 2017 by yourself. That's great. But if we want to have adoption in a bigger market, we have to get those institutions in.
And somebody's got to sell into those institutions. Let's talk about the chart that you've got on your screen. So just explain the blue line to our viewers and to our listeners. We're plotting the graph of US dollar weakness against the Bitcoin price. It's a clear graph that says that when US dollar gets weaker, the Bitcoin price goes up. What are you plotting that US dollar weakness against? Is that the dollar index? Is that dollar versus a basket of currencies?
It's a US dollar currency index. I mean, if you're going to put on the chart euro dollar, you'll probably see the inverse of this chart, as the euro has been doing relatively well, or the dollar has been weakening. But for instance, during this year, we know that 23% of the overall dollar has been printed in this year. So that's weakening the dollar, and that's driving up all the asset prices. So stock prices are hitting all-time highs. Gold has been doing relatively well. I wanted to try to get that one on, but it doesn't work. And Bitcoin has been doing well. But what we see in general is that it's funny. You can't really predict anything out of it. But during the bull run of 2017, the dollar has been doing relatively worse as well. So what we see here is that during the overall bull run of Bitcoin in 2017, the dollar has been showing weakness. Funny part, if you go towards 2012, 2006, dollar has been showing weakness, while gold has a tremendous run of 600% during those years. And now we see the inverse correlation kicking back again, in which we see that during this crash, people were flying towards the dollar out of safety and for liquidity. And since then, the dollar has been showing weakness and Bitcoin has been doing well.
What does the new US regime mean for the US dollar? I mean, it seems like people are saying that under Biden, we're going to have a much weaker dollar. And that's what the market is kind of pricing in. I think also under Biden, they're waiting for a new stimulus. And I think the feeling is that the Democrats may bring out a much bigger stimulus, or may push for a much bigger stimulus if they can get it through.
Well, they are trying to keep the economy running. And the only way they can keep the economy running is by printing a lot of money and trying to keep the inflation up. The moment that there is going to be a shift, and either a bank is going to default, just similarly to 2008, or when we're going to see deflationary concept, which we actually had in March. There was deflationary system in that period already. We can see it here in Amsterdam slightly, as the housing prices are starting to drop relatively, like few percent. If that is going to occur, the system will fall with the insane amount of debt that they have. So they have to keep the inflation going. However, it's quite heavy for them to keep it running. And that's why they are pumping all those dollars into the markets. And that's what's weakening the dollar. So the only thing that the government right now wants to do is keep that system going. They have been doing that since 2008. That's why Bitcoin was invented, and they are still trying to keep it going.
That, you know, it's almost like a drug addict that's addicted to a drug. And in this case, they're addicted to stimulus. They're addicted to printing money. And the problem is that they can't stop, because the minute they stop printing money, everything is going to fall over. Same as a drug addict who, you know, stops without slowing down, goes into withdrawal symptoms and goes cold turkey. It's not going to work. So they've created a world where they are addicted to printing money. And the problem is that we can't stop. They can't stop, which means that this chart, the dollar should get weaker and weaker and weaker. And if there is indeed an inverse correlation, then what we're saying is that the Bitcoin price is going to keep going up and keep going up and keep going up.
Well, it's the whole point. Like, if the dollar is going to strengthen, Bitcoin will have some issues with the price going up. They are correlated to each other in general, which is also with the gold price, for instance. So there's going to be periods where the rush towards dollars or the rush towards liquidity is going to occur, and that's the period you should not be bullish on Bitcoin. And that's the difference between what we see on the markets right now, is that some big analysts, some big dudes in this market are saying or predicting that the markets will go to 100K and 200K, or maybe even higher within the next few years for Bitcoin. That itself will not say that the economy will do well. If Bitcoin is going to 200K within a year from now, the economy in the US is completely destroyed.
Okay, there's a massive disconnect right now between the US stock market and the US man on the street. So the US stock markets, the NASDAQ, the Dow Jones, the Russell, they all at all-time highs. But when you speak to the man on the street, the businessman, the people that are supporting these companies, they sound like they're down and out. That can't continue for a very long period of time. And what you can only assume is that at some point, the US equity market is going to take a big, big, big hit. Despite the amount of money in the market, someone's going to look at this and go, hold on a second. People can't carry on buying things. You can't keep printing money. And then we're going to have a big US correction. Now, the question is, if we get this US correction, does that mean that Bitcoin goes down with it? Or do people run into safe haven assets like gold and Bitcoin?
That's the $1 million question, right?
Well, much more than $1 million.
Yes, I know. If you go back in history, in 2000, for instance, gold went down with the stock market. So what you see is that actually Raoul Pal uses 3 phases. First one is liquidity phase, and then there are 2 more. If the crisis starts to occur, which seems very likely within a few years from now, that would not be bullish for Bitcoin, as I think that there will be a rush towards liquidity. If banks are going to fall down, you have to get liquidity somewhere. So the run towards liquidity is going to be there. The question is, when is the crisis going to occur? Will it be when we are at 2023, 4 years from now, Bitcoin is at 200K, having another peak cycle where everybody's shouting you should buy Bitcoin? Or is it going to be in a year from now? That's going to be the heavy question, and nobody knows that. We are getting close to it.
Maybe Kevin knows. Kevin, when is this correction going to happen? Is there going to be a correction? What are you expecting under the Biden administration?
I think maybe one thing that's not fully appreciated right now is as prices get higher, we're going to start to see it's going to take a lot more capital to move the market in the same way that it's moved in the past. We're seeing a bit of decreased volatility in the market from, I guess, after the virus hit in March and April. Things have been pretty steady and smooth for Bitcoin. But yeah, I think as now that we've gone from 10,000 to 20,000, and if we head from 20,000 higher, it's just going to take a lot more capital to make moves in the market and to change the narrative for Bitcoin.
And that capital is coming from the institutions in the next run. I mean, surely you both said the same thing to me. You both said in different ways. You said we don't really need the retail investor anymore. This run is going to be powered by the institutions. Move over retail investors. The next million accounts on Coinbase aren't going to drive this. It's actually the institutional guys that are coming in and buying 100 million, 200 million, 300 million, 500 million, right?
Yeah, I think so. I mean, I should caveat that by saying Bitcoin is not Bitcoin without the retail investors, right? That is the underlying, that's the army, right? Those are the trolls that attack everyone on Twitter who badmouths Bitcoin, right? They get thousands of replies and, those trolls and
hold on, let me
Bitcoin
try that.
army.
No, I'm not about to commit suicide. Yeah.
What's that?
I'm saying, Michael, I said, let me try that. Let me go and post an anti-Bitcoin comment. I think I posted one in 2017 where I said, the maximalists are too toxic and it's actually Ethereum. Ethereum's got a much nicer ecosystem. And boy, oh boy, I didn't hear the end of that comment for many years. People seem to have found that comment, even though I deleted it. Michael, are you looking at anything else? Are you looking at Ethereum, or is it just Bitcoin that you're covering at the moment?
Well, the point is that markets move in cycles. Macroeconomic moves in cycles. Bitcoin moves in cycles. And within the crypto markets, there's different cycles as well, which means that if Bitcoin is going to consolidate, there will be a certain period where altcoins will relatively do well. So after Bitcoin, I'm watching the Bitcoin dominance chart and I'm watching Ethereum as the main driver of altcoins in general. And if you time the altcoin cycles well, you can make a large amount of money.
I love that. So let's talk about timing the cycles well. If you look at what's going on in the market now, the Bitcoin dominance chart has come down. It looks like the money is going into it. Whoa, okay. That's exactly what are we looking at there?
A very blurry chart. I didn't know that it was still up. But okay, I'll try to figure this mess out. What you see here is that there is always cycles. And the main point that you should be looking at is this is the Bitcoin dominance chart, which means that it tops out as well, just like any price asset, it tops out and it starts to drop down. What the point here is that during the previous 5 years, you can actually use the ETH BTC chart as well as a narrative. It tops out in December in general. Why is that? I don't know. It's cyclical, so it's always topping out in December, which means that the best period to invest in altcoins is during this period of the year, or at least in the coming weeks. And what you see afterwards, the first drop down. So within a year, the first quarter of the year, altcoins will do relatively well. And during the summer, there's a period. And in between those two, you should not be into altcoins. So if you want to start investing in them, I think the period is starting to occur.
So start investing in altcoins now. And according to this chart, more or less, when should you look to offload your altcoins?
In general, when you get the signals on this one. So for instance, if you get a bottoming construction, or Bitcoin is about to make a heavy move, or everybody and their mom and the Uber driver is talking about altcoins, those are the moments you should be getting out of them.
Yeah, I went for a haircut today, as the viewers can see. Great cut. My hairdresser told me that she bought Bitcoin and she bought Monero. And as I heard that, I got that shiver because I felt 2017 all over again. Mm-hmm. Are you feeling that? I mean, you're in Holland. I mean, in the Netherlands. Are you feeling that? Is it?
Well, when we go to the bar, we don't have any plastic on. I don't know what's going on with your headset, but there's still some plastic on here. No, but
oh yeah, you're right. Okay, let me rip that off. Hold on.
I was confused, man.
That's what happens when somebody buys you a headset as a gift.
Well, there you go.
There we go.
In the Netherlands, it is. I think the community is relatively big in our country. It's one of the biggest or largest in Europe. Turkey is probably bigger than the Netherlands. But I get a ton of messages from people who were in crypto in 2017 and all of a sudden want to have exposure again. And I think that's going to.
They're not in yet. It's like March. No, it's like June 2017. I don't know if you remember, but.
Yeah, I do.
March, April, everything started to fly. And by June, people were asking questions. I kind of feel like we're in June 2017 again because, I'm getting one or two. Should I get in there? Should I be buying? When should I be buying? but it's not a frenzy like it was towards November and December 2017.
Well, in no means there's no peak high euphoria right now. It's a completely different market, and you actually discussed it with Kevin, the previous guest. It is a different cycle, and I think retail in itself is completely focused right now on buying altcoins, and that will always be the case. They want to have the next 100x, and that's why all these clickbait titles will relatively do well on YouTube. But that's the focus on retail, and I think that retail will jump into the markets the moment that altcoins will do well. So probably in the next months, when some of them are skyrocketing, or in the next year, they will jump into the markets to buy the top, which is in general always the case.
Is it?
They're now busy buying Tesla.
Yeah, I think Tesla at $600. Not on my buy list, let me tell you that. I mean, I don't know if I'd have the guts to short it, because you never know what Elon Musk is going to pull out of his pull out of his sleeve, but not something that I'd be buying.
No, if I see this chart, it looks like every average altcoin that's just pumping up and about to drop like 80%, which is the whole issue with the market in general. I mean, this is just ridiculous.
Would you have the guts to go short, or maybe sell out of the money calls here on Tesla? I mean, when you look at that graph, I mean, come on, we know how that graph ends, right?
Yes, but the whole issue is with trading and investing is timing. So if you can start shorting this one, but it can still continue running. If, for instance, if the inflation accelerates to 5, 6, 7, 8% a year, this one is going to run up even more than you expect it to be. So timing the markets is the more crucial part of this. And I would love to short tech.
It's amazing how the tech stocks have become a store of value. People are putting their money in Amazon, Facebook, Google, Tesla, etc. Almost like a store of value, almost like replacing what gold should be, because they don't want to be keeping their money in US dollars and either getting negative yields or just getting zero yield. There was this article that came out on the weekend, and we are going to talk about it, and that's DeFi hitting 1 million users. When you see that, does that make you want to FOMO into Ethereum?
Well, in general, I would love to have a big bunch of Ethereum, yes. I mean, if you think about it, Ethereum has so many more opportunities than Bitcoin in itself. So Ethereum could be the largest cap at some point. So if I want to invest in cryptocurrencies right now, I could buy Bitcoin, have less risk or the lowest risk, but I could also invest in Ethereum and have a higher risk-reward ratio, right? Which is the same as buying.
Hold on.
It's the same as buying silver instead of gold. If you want to have exposure to the commodity markets and you check the silver-gold ratio, there's absolutely no point in holding gold. You should invest in silver, which is kind of the same.
So if you had $10,000 and you could only invest it in one, and the idea was to get the highest return, not to get the highest risk-adjusted return, but to get the highest return, would you put the $10,000 into Bitcoin, or would you put the $10,000 into Ethereum today?
Ethereum, 100%.
Okay, great answer. What would be your price target for Ethereum 1 year down the line?
1 year?
1 year.
That's completely speculating, man. That's relatively hard. I think we're going to see if DeFi works, if ETH 2.0 starts to work, if Bitcoin starts to accelerate a little bit. I'm not one of those dudes targeting Bitcoin at 200K next year. My target is around like 50, 60, 70K. So I think Ethereum will be around all-time high, probably 2K, somewhere that range 1 year from now.
Okay, so that means that we've got about a 3x on Ethereum, and according to you, we've got about a 2.5x on Bitcoin.
True.
All right. On a risk-adjusted basis, where would you put your money? Because Bitcoin is obviously less risky than Ethereum, right? With institutions climbing in, people have accepted Bitcoin. They haven't really accepted Ethereum. On a risk-adjusted basis, probably a better place to be sounds like it would be Bitcoin.
Of course, 100%. I mean, if you're a fund manager and you want to expose yourself to crypto, there's only one currency you can actually add according to your standards, which is Bitcoin.
Alrighty. Now, I don't know if you guys know, but Adrian Bashuk, who was my producer at CNBC and is one of our producers here on Banter, he trolls the social airwaves and he finds what people are looking at in the social airwaves. The reason why I'm keeping you on for this, Michael, is because after this, I want to really find out 5 coins that you would be investing in other than Bitcoin and Ethereum. And we call this trade the top 5 trades of the week. It doesn't need to be the top 5 trades of the week. It could also be where you would put $1,000. We don't want to know about Bitcoin and Ethereum because everybody needs to have Bitcoin and Ethereum in their portfolios. What we do want to know, though, is where you would put your money into the more exotic things out there to get the most return. Adrian, you've been on the social airwaves. What's going on social media? What's the sentiment like? Are they saying that Bitcoin's going to break up? Is it going to break down? I see DeFi stocks went crazy on the weekend. Give us an update. What's going on?
I mean, look, luckily, Bitcoin is trading in a range. It's somewhat flat. We hit, a low of 18.8 going into the weekend, and we've stabilized. We're trading in this choppy range, 19.2, 19.3. That might be a local top. We don't see any big breakout up to the 20K mark. So people are looking to spread around their previous Bitcoin profits. I know a lot of traders that are looking at the alt calls. We can go through some of these if and when you want. You tell me when you want to look at what you're talking about.
I want to know the alt calls, and I'll tell you why. Because people come to Crypto Banter to make money. And in this market, if you want to make money, you've got to get information first. If you want to get information first, there's no live streaming platform. We are that live streaming platform. We have a responsibility to our amazing community to bring them these live calls. So, Adrian, what's happening on the social airwaves?
I mean, look, none of this is financial advice. Disclaimer right there. This is just what people are talking about, what people are saying on the socials. So let's take a look. I'm going to share the screen of just a compilation of some of the things. Number one, join the Telegram group, Crypto Banter. Rand posting in there, what are your top 5 trades for the week? If Bitcoin is stuck in that range, what are you trading? And people immediately responding with CVP, Cover, Scale, AP3I, WazX. There's all this talk about Steve Wozniak, the co-founder of Apple, starting his project.
Let's talk about those. Last week on the show, we called Cream, and that we called it about $400. It went up to just under $1,000 this weekend.
Yep.
That was Cover Protocol. We called Cream. We called Nexus Mutual. All of those went up like crazy this weekend. We have some calls. We're going to try and get Steve Wozniak on our show sometime this week. We are speaking to them.
We've had him, and we've talked to him in LA at the LA Blockchain Summit.
Yeah, but I want to hear much more about WazX because I guess that's the big talk right now. He's actually put his name to a project, and that's something that
which is rare. He does not shill anything whatsoever. He really does.
All right. What else is happening in social media?
Let's take a look at the macro view, right? You've got Ryan Selke saying global equities are at $100 trillion market. Compare that to the crypto market right now at $570 billion. This is infinitesimal, right? Ryan Selke is asking, is this the beginning of hyperinflation or the end of a bubble? Just a big macro view. Mark Yusko, obviously Anthony Pompliano's partner, like here's the brains behind the operation. Talking about scarcity, Bitcoin is actually the scarcest asset in the world based on stock to flow measure. Just think about that. Simple supply and demand. That's the macro, right? 1.7% of the world's population has exposure to Bitcoin. That's on the high end. 1.3 the lower end. We're talking huge room for growth. Huge room for growth. Let's get into the alts and some of the projects in the DeFi space. Andre, the lead dev, one of the masterminds in the DeFi space, tweeting about Mushroom Finance and their integration, because Yearn and Wi-Fi has set up this whole ecosystem, all these partnerships. Keep it on anything that they partner up on. I mean, it's a no-brainer.
We're going to be speaking to DeFi Dad in the next segment, and I mean, he's a big DeFi guy. I'm going to actually speak to him about smaller projects. So DeFi Dad, I know you're there. I can see you in the waiting room. I can see you're listening. We want the big, in fact, let me bring you in. DeFi Dad, we are bringing in the next segment, but we want the big calls. We want the ones that nobody knows about. We want those nuggets. So start preparing yourself. Adrian, Andre Cronje is a fellow South African, and he's doing amazing things. It seems that he's really become like this kingpin. And like every time he tweets about a project, the project spikes.
Yeah. Well, and also what he's building on. Look at Bancor. I mean, Bancor, which really helped start this whole decentralized exchange model. They were first movers in the space for a long time out of Tel Aviv, and what Gali has done with that and her team is amazing. They teamed up with Ren and YFI, where you can receive Bancor liquidity mining rewards. That's something to keep an eye on because Bancor has a ton of partnerships. We talked about Cream. There's all these cross partnerships now happening between the DeFi space and, let's say, Link, an Oracle-based project. So Cream partnering with Link as the primary Oracle solution provider.
Adrian, a couple more because we do have Isaac. I see you in the waiting room. We've got a massive DeFi panel just after this. We're going to be talking about DeFi hitting 1 million users, where we should be putting our money on there. We've got Richard Chen on that panel. We've got DeFi Dad on that panel. Yeah. Let's go through a few more tweets and then let's cross over to our amazing panel.
Quickly, Crypto Messiah tweeting about Stake XDAI. That's a project to keep an eye on. Vitalik has tweeted about that. Stake and XDAI as we went through. And then Base. There's this very interesting rebase protocol. Base. This isn't based, but Base. A lot of people have been talking about that. Check that out. That's been in the Telegram group.
So, I followed Base on this weekend. Base started at about 80 or 90 cents, and it went up to about $2 on the weekend. And then bang, it looked like those 2017 pump and dump weekends where it just went straight back to $80. I'm going to quickly look it up on my screen over here. Give me 1 second. Let me just refresh the feed. Base protocol, 45 cents. Now, that has come down from about $1 and a $2 high. So again, just warning our listeners to be very careful if you are playing in these protocols.
Absolutely, and check them early. If you're not in early, don't worry about it.
Yeah, Adrian, you saw this headline on the weekend, I know, because we had a chat about it before the show. DeFi hitting 1 million users. It happened quite quickly. I mean, we had DeFi at 10,000 users last year at the same time, and now we're talking about 1 million users. Is that what you're seeing on the social airwaves? Are people excited about it?
I think more people are excited about total value locked, and that's the metric and the number to keep an eye on. And as that grows, I think it's less about number of users, more about total value locked.
Amazing. Michael, Adrian, we're going to say goodbye to you now. We're going to bring in our next panel. We're going to be talking about 1 million users on the DeFi platform. But first, before we cross over to our panel talking about 1 million users on the DeFi platform, I need you guys to do something for me. I need you guys to hit the like button and hit the subscribe button, because that's the only way that we're going to get more viewers, and that's the only way the YouTube algorithm decides to share our content to other crypto enthusiasts and bring them this live feed. Also, guys, we sit and talk crypto all day long to our friends, to our family. We're on crypto Twitter, we're on Telegram all day long. Bring that banter to cryptobanter.com. Let's talk crypto. Let's talk crypto 24/7, live 365. I'm excited for the next segment, all about DeFi hitting 1 million users. We'll be back.
Crypto Banter is the world's first interactive social cast for the crypto community. Get the latest news, views, interviews, and live conversations with crypto enthusiasts from around the world. This is where you call in, you make the show, and you bring the banter. That's CryptoBanter.com, where you talk crypto.
That's CryptoBanter.com, where you talk crypto and when you hit the like and the subscribe button. We're moving on to our next segment, and we are talking about DeFi, the big theme. DeFi reported this weekend to have 1 million users. That was broken in a tweet by Richard Chen. We've got Richard Chen and DeFi Dad right here on our show talking about DeFi and the 1 million users. Guys, welcome to Crypto Banter.
Thanks for having me on.
Yeah, thanks for having me on. This is awesome. Richard, good to see you too.
Good to see you.
It's amazing that we've got a platform where we can actually sit and talk crypto to one another. Remember, you can remain anonymous. These guys have come on and decided not to remain anonymous, but we know that anonymity is great for the crypto community. Call in, remain anonymous. Put up an avatar. Let's talk crypto. Let's banter. Let's get information from one another. Let's build a stronger community, and let's make money. Speaking of making money, Richard, there's a lot of money being made in DeFi, and you broke a tweet this weekend that said that there's now 1 million users in the DeFi ecosystem. Tell us a little bit more about the information behind that tweet.
Yeah, sure. So I created a Dune Analytics dashboard that tracks like the number of addresses that's interacted with all these major DeFi projects like Uniswap, Compound, Kyber, 1inch, OpenSea, Aave, and others. And from like the graph, I've been like refreshing it like every few hours for like the last couple of days, and it just hit 1 million. Now it's because users can have multiple addresses. The actual like number of like humans who are interacting with DeFi protocols is like much less than 1 million. I'm estimating it's probably going to be a couple 100,000 with like maybe average of 3 addresses per user. But like regardless of like how many real humans are interacting with DeFi, like the fact that there's a million addresses that have used DeFi projects is a lot and is a big milestone for the community.
Okay, now last year at this time, there were about 10,000 addresses interacting with DeFi protocols. It just shows that DeFi protocols have come a long way. Are you impressed by the growth? Did you think that we were going to get to 1 million addresses? Were you blown away to see us going towards 1 million? Give us a little bit of.
Yeah, so I made this back in April, and back in April when I like did like the regression of like the data, I think it was growing at like 0.5% day over day. And like if you were to extrapolate that, I projected we would reach 1 million by March 2021. Then like over the summer, like yield farming happened. A lot of people got excited about these like 1,000% interest rates. So you had a lot more people come into this space, and that's why we hit 1 million a lot faster.
When you look at the addresses that are interacting and you look at what they're interacting with, what are the most advanced protocols? What are the ones that are gathering the most attention? Who's driving this growth?
Yeah, so the 2 largest are Uniswap and Compound. Uniswap, there was a huge jump in number of addresses when they did their farming, uni farming. So like when they incentivized 4 Uniswap pools, then all of a sudden you got a lot of people come into this space. I think a lot of them were like whales who like moved their Bitcoin out of cold storage, wrapped Bitcoin, and like farmed like the ETH Bitcoin pool. Which I know a couple of them. And then like Compound is another one where you saw. I think Coinbase did like a program with Compound where like it's one of the Coinbase earn programs where like you earned comp tokens for like learning about Compound, and there was a big spike in users because of that. And also because they had their farming program with the comp tokens.
So we have one of our viewers or listeners in the chat that's asked about wrapped Bitcoin. And I've always wanted to know this question about wrapped Bitcoin. When you buy a wrapped Bitcoin, you're buying a Bitcoin that's wrapped up in the Ethereum protocol, and then effectively by being a wrapped token, the Ethereum protocol allows you to participate in DeFi projects and other projects on the Ethereum protocol. How safe is your Bitcoin? I mean, you're trading in a Bitcoin. It's like the biggest sin in the world not to have your keys. And now you're trading this Bitcoin for a wrapped token on the Ethereum blockchain. Should our viewers do this willingly? Should they feel safe when they send a Bitcoin and make it into a wrapped Bitcoin?
Yeah. So if I understand wrapped Bitcoin correctly, it's BitGo that custodies the real Bitcoin. It issues the ERC20 wrapped Bitcoin on Ethereum. So basically, the single point of failure is BitGo. You have to trust that BitGo's cold storage works, and your Bitcoin is safe there. There's also alternatives to wrapped Bitcoin that are more trust minimized, like REN and TBTC. Those are newer, but like the vast majority of Bitcoin and Ethereum is in wrapped Bitcoin.
DeFi Dad, I'm going to bring you in here. Do you trust your wrapped Bitcoin? Would you take your Bitcoin and trade them for wrapped Bitcoin so that you could participate in the APYs on these DeFi networks?
Yeah, I just think about limiting that exposure. Like I wouldn't put all of my Bitcoin into wrapped Bitcoin because there is risk there to recognize. I think you guys called it out with the custodial risk. I also recognize, though, that wrapped Bitcoin's been successful for many years now. They have so much at stake, BitGo. And so, yeah, I think it's kind of, I don't want to compare it to Tether. I think Tether, there's more concerns there, but it's like one of those things that everyone uses it, but then says, I wish there was something a little bit better. So you do have things like SBTC by Synthetics, which is over collateralized, and that represents Bitcoin. You also have Ren Bitcoin. Ren Bitcoin to me is probably the most interesting, because if you go to the Ren bridge, you are able to simply move your Bitcoin from a Bitcoin wallet. You submit it to, like, basically they give you a little QR code, send it into the address, and however long 6 block confirmations takes, that's how long it takes to get your Ren Bitcoin onto the Ethereum blockchain. So for me, I'd say in the last year, that Ren Bitcoin bridge was like one of the inflection points. I was probably the most excited to realize I no longer have to ever use a centralized exchange for any of this. I am 100% going to just do the wrapping of my Bitcoin or exchanging it to Ethereum myself.
Yeah, now a lot of our viewers here are asking for the next best DeFi projects. We're going to get into that. Rich, I want to ask you a question. These addresses, do we know where DeFi is actually happening? Is it happening in Asia? Is it an American thing? Where do we have any data on where these addresses are coming from?
I don't have the data, but I guess looking at like gas prices, the gas prices do kind of like give some clues into where DeFi activity is happening. So and DeFi started mostly as like an American phenomenon, where like the early DeFi projects were, I think a lot of them were based in San Francisco, like, or New York, like Uniswap Compound and others. But then like once you got the traders into DeFi, once like decentralized exchanges got a lot of volume, then most of the traders, from what I've seen, are based in Asia. And you can see this with gas prices, because gas prices are most expensive during like Asia market hours and cheapest when like Asia is asleep. And that's just one thing I've noticed.
Alrighty, now the big chain where all these DeFi protocols are being built obviously is Ethereum. What do you think of Ethereum's price at this point? Do you think that, you know, we've just started because DeFi is working? DeFi Dad, I'm looking at you. Where do you think, I mean, are you bullish on Ethereum because of DeFi?
I am, yeah. I think that for a while there was this conversation of all this utility is being built on Ethereum, but it wasn't being priced in, at least at the rate that people wanted to see it priced into ETH. I think that's changed. You know, I think we've, you know, if you watch the ETH Bitcoin ratio over the last year, it's finally catching up. One of the things I often do is I go to this website. It's cryptofees.info. Let me just double check that's correct. Yes, correct. Can I share this screen, Rand?
You can share your screen. There's a little share screen button at the bottom of your screen. While you're calling up your screen, I'm going to remind our viewers, hit the like button, hit the subscribe button so we can bring you more information. We're talking DeFi. We're talking 1 million users on DeFi at the moment, and we're talking about where this is going. I've got Richard Chen with me, and I've got DeFi Dad with me, and I guarantee you that by the time I'm finished with these guys, you're going to have a shopping list of DeFi tokens second to none. So stay tuned, hit the like button, hit the subscribe button. Okay, you want to share your screen? Show us what you're looking at.
Yeah. This is really simple. So you're looking at the amount of fees accrued in 1 day versus the 7-day average. And so as you look across these, I want to call out, it's not fair to just compare them like apples to apples here, but throwing that aside for a moment, obviously what stands out is Ethereum tends to top the list most days. Bitcoin also has continued to sort of battle with Ethereum per usual. Uniswap, though, as well has topped that list. And you look at Uniswap, you look at SushiSwap, Balancer, Ren Protocol, Synthetics, Curve. What else do we have here? 0x. Anyways, these are all built on Ethereum. And so you start to look at all of those fees that are being accrued, which is really a reflection of the activity, which is a demand for folks to use a blockchain. And so you look at that and you say, is it possible that like the market is definitely lagging behind in terms of pricing that into Ether? Of course, because folks don't know about this. So
I think so. And that's because every time that I want to perform a transaction, whether it's harvesting some tokens that I farmed or doing, I'm spending 30, 40 bucks on a very simple transaction. Surely, that must be one of the barriers here.
Absolutely. Yeah. And that's why the launch of ETH 2.0's beacon chain last week was so important, because we really are at the point of like we need a solution, or else we can't enable that many more people to use Ethereum paying high gas prices. We saw that over the summer, and I think we all sort of breathed a sigh of relief to see that the markets pulled back a bit, and a lot of folks stepped away from all of the crazy yield farming that was going on. And that's the silver lining, because I mean, my goal, like, I make content to try to educate folks that are brand new to the space, some that are more veterans to the space, but I want to help the person who has less than $100 understand how to use DeFi. If they can't pay the gas rates, that's something that is going to prevent adoption long term. So
I'm trading more than $100 and I can't pay the gas rates at some days. In fact, I mean, interestingly enough, I bought a Jeep, and I mean, the Jeep has a 3.6 liter huge monster motor in the car. And the one day I compared the amount of gas fees that I paid on the Ethereum network versus the amount of gas that I paid, because I filled up gas in the Jeep, and the gas fees that I paid on Ethereum were much higher. But then again, I made a whole lot of money that day, so everything was forgiven. But guys, let's cut to the chase. And before I bring in the next part of the show, I want everybody to hit the like button and hit the subscribe button right now. And I'll tell you why, because in this part of the show, I'm going to put our guests on the spot, and I'm going to ask them for the 3 most promising DeFi projects, because we have 2 experts here in DeFi, and I want them to tell me what they're looking at. Now, I want to know 3, and if you're going to give me 3 big names, know that I'm going to come after you for much smaller names afterwards, because a lot of our guests don't want to be buying YFI for $30,000 or even Uniswap at $4. So I'm looking at you guys, and our guests are looking at, and our viewers are looking to you guys for the hidden gems and why we like those hidden gems. But first, guys, hit that like button, hit that subscribe button. Our views are going up, which means that you guys are doing a fantastic job, but we need you guys to spread the love and get people to listen to the show. Also, call into the show. Let's talk DeFi. You got 2 experts and 1 guy in me who keeps losing money in DeFi. Call us. Let's talk. Let's banter. Let's talk crypto. Let's talk DeFi. Alrighty, Richard, you're up.
Sure. So 3, I guess, under the radar DeFi projects. So I would go with Nexus Mutual, Notional, and Polymarket.
Okay, so let's talk about the first one, which is Nexus Mutual. Nexus Mutual is the DeFi insurance protocol, and that has a market capitalization of north of $100 million. Is that still a buy for you?
Yes. And I made a tweet the other day about Nexus Mutual. It's so Nexus Mutual isn't on crypto fees, but if you were to add it to crypto fees, it would be one of the most profitable DeFi projects, just because they're earning so much money from the premiums that people pay to buy cover, as well as like the sell spread. So I think around like 11% of the capital pool right now comes from basically earnings from the protocol, rather than people just buying into the token. So it's a very profitable business.
What about Cover protocol? When you compare Cover to Nexus Mutual, I know they're different in how they insure their transactions, but when you look at the 2, Cover protocol has half the market cap, or I don't know what it's trading at exactly now, but it has been hovering around $30 million. How do you compare the 2 in terms of value?
Yeah, so Cover protocol works kind of like a prediction market, where you buy these a claim and no claim tokens, and like they will eventually settle at 1 or 0 depending on if the project gets hacked. So with that model, if you look at the premiums right now, they're like 20 to 30% to buy Cover on, say, like Pickle Finance, and like right now it's being heavily subsidized by yield farming. But the question I have is that in the long run, once that yield farming dries up, will the premiums be as competitive as Nexus Mutual if they need to be fully collateralized in the prediction market model rather than like a mutual model?
We have a caller who's come on the line. He obviously does want to remain anonymous. Jason, you want to remain semi-anonymous? I guess you've got a question about DeFi for our panel over here. Ask your question. We're all ears, my man. You just need to.
Yes, I'm calling. Oh, I'm sorry. I didn't mean to interrupt you. I was calling because at first I want to thank you. You brought up pickle, and I did a little research, and it got me to buy some pickle. So I got the pickle, but I'm scared to go to the jar. I heard about urine, and hopefully that works out. But my question is, how do I go about getting pickle cold? Because I can't find a way to store pickle cold.
How do you go about storing pickle cold? Isn't pickle an ERC20 token?
Yeah, I was gonna say I can help there, buddy. All you got to do is, if he ends up watching this, yeah, it's an ERC20 token. So all you got to do is store it in an Ethereum wallet. If you use something like a Ledger, you can send it to that address. I'm not sure if Ledger Live will support seeing it, but there's ways to see it. Like if you connect it to Zapper, Zapper.fi will let you see that pickle in your wallet.
We're going to talk about Zapper because I discovered Zapper, and I must say Zapper has absolutely changed my life. I'm going to leave that a little bit later in the show. All right, Richard, you spoke about Pickle. Pickle was doing fantastically. They then got hacked or they had a security breach. It wasn't exactly a hack. I don't know if you can define it as a hack as much as it was an attack. Are you bullish on Pickle? I mean, I see Pickle's running again. We had it called on the show. We called it again this week. I'm just checking the latest price of Pickle is just under $20. It's 18.27. Are you bullish?
I'm generally more skeptical now of all these like fast follower projects, often launched by anonymous teams that are like kind of like they take the test and prod mentality with other people's money, and because they're anonymous, there's less like personal repercussions to them if they're like careless with other people's money and like they get hacked. So I tend to avoid a lot of these like anonymous projects.
All right. So you mentioned Nexus Mutual. Your next call for your top 3 DeFi plays is?
Notional is another one. Notional, they don't have a token. They just launched. They're doing a fixed rate lending and borrowing in DeFi. So like obviously, Compound and Aave had huge success. They're both a variable rate DeFi projects, but if you look at the traditional financial world, the vast majority of like loans in traditional finance are fixed rate, not variable rate, because lenders and borrowers want security in like what rate they're getting. So that's what Notional is doing.
They want predictability. Before I take you to your third choice, DeFi Dad, your top project at the moment, it doesn't have to be in order, but one of your top 3 projects at the moment in the DeFi space is?
Do you want the larger cap or smaller cap?
You start with whichever way you want, and we're going to get to both, so I'm not going to let you off.
Yeah. I mean, I got to say it's funny because Richard and I, we both follow Nexus closely, and I just came from an interview with Hugh, and so I don't need to add much more there to it. Just Nexus continues to be, I think, it's a project that's hard for people to understand because it's an insurance mutual at first. So anyways, throwing that one aside, that's an obvious one to me. It's one that I continue to add to my position. On the large side, it's hard to not pay attention to Aave. If you look at, I'll show you later here, a whale wallet or a few whale wallets. Aave is just an outrageous machine that pumps out the right products, but they also have a really strong community and a really great way of, they're very good at marketing themselves. So anyways, it's hard to not pay attention to opportunities to stake Aave. I'd say on the smaller side, one other one that you guys were just mentioning is CVP is concentrated voting power. That is for Power Pool. The reason it's so interesting is they recently launched a DeFi index, and the index is not just holding a basket of tokens. The underlying tokens are used for yield farming. So instead of you holding broad exposure to the market, you're holding broad exposure to the market with the tokens being used to earn you cash flows while you're able to still vote on those governance protocols. So I hold a single token, but I can vote on 8 different protocols.
Wow. Now, speaking of Aave, I went irresponsibly long at about 45 cents, but really irresponsibly long. So now I'm holding a shitload of these tokens. Where is the best place to earn yield on these Aave tokens? If you were holding a bag, where would you now earn the yield? Where would you put them to earn some yield?
I mean, fortunately, the most obvious place is actually with Aave. You can stake it. They call it the safety module. It's basically like their own insurance fund. And by staking it, you could lose up to 30%. So forewarning there, if there was a slashing event or if there was some sort of loss of funds. But yeah, Aave's got competitive rates there. And then
what kind of rates are you? What kind of rates are you earning there?
So the last I checked, it was, gosh, let me see here. If I take that times 12, it would be about 40, about 5%. You're earning 5% annually, but remember that's earning Aave. It's not earning it in USDC. So whatever the price of Aave is going up, that's where those crazy APYs come from. That's why staking Ether is so exciting to people, because you're earning more Ether, not more USDC.
Yeah. All right, Richard, your next call. I think this is your third call. Maybe I'll let you off on 3, depending on how exciting and how juicy this call is.
Sure. This one is Polymarket. So Polymarket is a prediction market platform. And they got a lot of attention during the 2020 presidential election because like the political pundits like Nate Silver from 538, Real Clear Politics, and others, they were all saying that like Biden had like an 88, 89% chance of winning. And like Polymarket, the odds were about 60% Biden, which now that we have like the benefit of hindsight, like the prediction markets like vastly outperformed the pollsters. And like that kind of proved the thesis that if you have like a marketplace of information where traders actually have like skin in the game and can bet on their beliefs, rather than perhaps there's like shy Trump voters who like don't want to tell a pollster that they're voting for Trump, and you get bad data. So I think this is like really important because I didn't realize until like a few weeks ago that the polling industry is like a several billion-dollar industry in the US. And in the last election, there were like hundreds of millions of dollars wasted of like campaign money that was wasted from bad polling data. Like, for example, you had like a Democrat who ran against Lindsey Graham and lost by the same margin as the last election. And while there's like hundreds of millions that was being spent in that campaign. So I think there's a huge room for the polling industry to be disrupted by prediction markets. And like prediction markets obviously have use cases in like other industries, but polling is like one that comes to mind.
Guys, I can't tell you how crazy the chat's going all of a sudden. It's like you guys have opened up a can of worms. The chat's going crazy here. One of the questions on the chat is, what are your thoughts? It comes from Pink Summer. It says, what are your thoughts on Injective Protocol? And just for full disclosure, I am a bag holder of Injective Protocol. Very keen to hear your thoughts on Injective Protocol.
I don't know anything about it, but I'd love to learn from you guys about it. Yeah, what is it?
Yeah, I know Albert personally, and I'm a big fan of Albert. I haven't been following the project too closely lately, but I know they started out as a protocol to prevent front running with verifiable delay functions. VDFs is this new cryptographic primitive. Since then, they've pivoted to doing a layer 2 derivatives exchange, and I haven't tried out the product, but they've just launched.
All right, another question here on the chat. And again, this is a forum where, you know, we ask the community to call in, to chat to experts like you guys and to people who are learning like me. And the question is, which one, Uniswap or SushiSwap? If you were just buying the token, where would you put your money? Would you put your money on Uniswap? DeFi Dad, you're nodding, so I'm going to hand that question over to you. Where would you put your money?
Yeah, that's a tough one. A few months ago, I would have laughed and said, of course, Uniswap. I think it's the darling of DeFi, and I've thought a lot about like how will the market continue to perceive this like leader in DEXs. I would say now it all depends on your tolerance for risk. If you are more risk on, Sushi might have more upside. I want to commend them. Like SushiSwap really turned it around. They had a little bit of drama there upon the start of the exchange, but 0x Maki, who's the anonymous like sort of lead behind it, they've just continued to grow, and I think actually they've helped Uniswap ultimately to grow as well. If you are more conservative, though, I think that Uniswap will continue to be a blue chip DeFi token.
I must say, I think that Uniswap is the big daddy, and I think it's unstoppable now. And I think that what we are seeing today on these DEXs is nothing, because we are seeing human interaction with DEXs. And I think the future is when computers or machines start to interact with each other on these DEXs and start using these DEXs. Now, another confession is that I bought sushi, and at about 70 cents, which is about the low, I thought there's no reason to hold this thing anymore. There's no community. They've killed themselves. They've blown themselves up. And I sold everything, and I rebought it back at like 120 on the way up. So that's just a typical story. Richard, Uniswap or sushi today, if you were going to invest your money, where would you put your money?
So like right now, Uniswap is like the clear DEX leader in terms of like DEX market share. Like I think Frederick from Dune has a tracker for that. And I think Uniswap does about 70% of DEX volume right now. But I will say that if you look at market cap, Sushi is trading at a huge discount to all the other DEX tokens like Curve, Uniswap, Balancer, and others. So I think there is more upside for Sushi. But if you think the DEX market is going to be a winner-take-all market or like duopoly take-all, then it can make sense to bet on the blue chips.
What do you think? Do you think that this is a winner-take-all market, or do you think that there's going to be space for 2, 3, 4 protocols?
I think it's going to be a duopoly take-all. I think Uniswap and Curve kind of have carved their own niche, where Curve gives you the best prices for stablecoin trading, even better so than on centralized exchanges. And Uniswap, so with the AMM model, you need to bootstrap a lot of liquidity in the pools in order to get good pricing. And that makes the liquidity more defensible. So it's kind of like where it's a cycle where liquidity begets liquidity. The more liquidity you have, the better prices you give traders in like it's a positive cycle.
Network effect. One other question before I come back to you, DeFi Dad. The question is Kyber Network. So the viewers asking that they have a bag of Kyber Network. They paid much higher than the current price. Is there anything that you can tell them whether they should hold it, whether they should sell it, whether they should switch it into other protocols? Any views on Kyber Network?
Richard, did you want to comment on that first? Or
I actually haven't followed Kyber closely in the last few months, so you might know more than me.
I think Kyber is not Uniswap, but Kyber, with how much liquidity they provide to DeFi, it's another one of those protocols where it's a big name, but a lot of people just don't understand that it's silently really powering a lot of our liquidity in DeFi. And so I guess if you're bullish on that, if you're bullish on folks getting more educated on that and digging into that narrative, which is, again, liquidity is king in anywhere, but especially in DeFi. I think KNC has a lot of upside. Also, too, they have a well-defined staking mechanism, and so they've got a very vibrant community there. But for what it's worth, I personally don't have exposure to it just because I tend to hold indexes, so I have more broad exposure.
Amazing. All right, guys, before I let you guys go, or let you guys have the floor here to talk about what you guys want to talk about, is there anything that we should be looking out for in DeFi, something that really excites you on the horizon? Again, the reason why I'm asking you this is because I know that you guys are forward looking in this. We're all seeing the current projects. We're seeing the price action in all the tokens that are running, and we're saying, wow, there must be a DeFi season, and alt season has been replaced by DeFi season. What are you guys looking at going forward? Is it insurance protocols? It sounds like there's too many lending protocols. What's the next wave?
Derivatives.
I agree.
Derivatives, right? Yeah, Richard, you want to expand on that?
Yeah, sure. I'll probably take you're bullish on Power Pool, right? I was going to talk about DeFi Pulse Index, DPI, which is the other big index token. And I think it's really cool, similar to Power Pool, where if you own the index token, you can vote on governance for all of the underlying indices and earn fees that accumulate to the token for all of the underlying indices. And there's a lot of interesting things that can be built on top.
That's one token that gives you diversification into 10 or more projects, right?
Mm-hmm.
And what is the token that our viewers should go out and buy if they want to get this exposure?
So DeFi Pulse Index, the ticker is DPI.
And how I'm going to call it up on my screen. I just want to show our viewers what the DPI has been looking like. If you just allow me 1 second while I'm calling it up on my screen. Come on, guys, hit that subscribe button. Let us know if you're enjoying this content. Let me quickly call it up onto my screen. There we go. Here is the DPI. It's at $110 today. Let's look at how it's done in the last, well, I always call up 180 days. It's been pretty stable, guys. It hasn't had much of a performance, even though the DeFi community has had an amazing performance.
Yeah, it has to do, I think, with the fact that you do have that broad exposure, and there are clear outliers right now that are winning in DeFi. So concentrated bets in Aave, as you know, have really paid off. There's also like SNX has just continued to earn. Those who hold SNX and are staking are earning, a lot of weekly income from it. So, it's not about, I guess it's not about having every DeFi token that's new. Sometimes it's digging into what are the DeFi tokens that are continuing to deliver in the dark when the spotlight isn't on them.
Amazing. And you both agree that derivatives is the next wave in this DeFi thing. If our viewers want to get involved in a derivatives play or in investing in derivatives on this on these DeFi protocols, where should they look? What are some of the big names they should be looking at?
Well, one of them that we haven't talked about is Hedgic. It's an on-chain non-custodial option. So you can buy wrapped Bitcoin or Ether options. Those are puts or calls, and you can buy those anywhere from 1 day to 28 days. The thing about Hedgic that's really nice or helpful to new DeFi users is you can go and stake whatever amount of Hedgic using either hedgicstaking.co, which is separate from Hedgic. It's a community member that built this staking module. There's also zealot.finance. And, it's another example of in DeFi on Ethereum, there's so many developers trying to build the next wave of tools. There's so much what we call composability or network effects at play. And so anyways, Hedgic to me it's just a really, really interesting protocol to watch.
Yeah, I'll go on top of that. So there's actually new projects that are coming to market. They haven't been announced yet, but are building on top of Hedgic and a lot of other options protocols. So like when you have options, you're gonna have a bunch of options trading strategies. Like you can sell covered calls, covered puts, which like the average retail user like probably don't know like the sophistication behind that. So there's projects that are building structured products where they leverage a lot of the Lego pieces in DeFi already to build like new structured products. And these are going to be really cool derivatives.
Alrighty. Rich, we are running out of time, and we have got an amazing segment up ahead with the guys from TERRA Luna or TERRA Money, and they launched Mirror Protocol last week. We've got them from Korea. It's 1 o'clock in the morning in Korea. DeFi Dad, I see that you're nodding, so if you want to stay on for the next segment, we'd love to have you on. Rich, I'm going to let you go. Thank you so much for coming on Crypto Banter. And I look forward to having you again soon. It's been awesome hearing from you guys and getting real insights on the DeFi space. Rich, thank you so much. DeFi Dad, before we stop talking DeFi, I tried the Zapper product today. Tell me more about this product.
Yeah, it's basically a portfolio tracker, but it's also meant to be your like home base for everything DeFi. So if you just connect an Ethereum wallet, you can track every last asset in your portfolio on Ethereum. You can also actually track your Bitcoin if you have a Bitcoin wallet address. And then it visualizes where your assets are, how they're staked, what's the net value when you have, like, let's say, a loan against the aggregate of your total assets. You can also trade on it. So there's a DEX aggregator. And then lastly, there's this thing we call Zaps. It just means it's a shortcut for adding liquidity. In many cases, like with Uniswap, you have to have 2 tokens. But if you use zapper.fi/invest, you can actually deposit liquidity with a single token and an unrelated token in the pool.
So it's probably the most valuable DeFi tool that I found. And there's a few reasons for it. One of the reasons is because I often forget where I stake stuff. So
yeah,
what I did was, I plugged in my Ethereum wallet. I connected my Ethereum wallet to Zap. I don't want to put it up on the screen because that may expose a little bit of my information. But immediately I found a whole lot of places that I'd left tokens that I'd completely forgotten about for whatever reason, either I'd lost interest or the amounts were too small. But it's been amazing having you on. I've loved the insight around DeFi. I think we need to talk a lot more about DeFi. So what I'm going to do is I'm going to get my producer, Narissa, to stay in touch with you and
Absolutely.
to get on much more regularly, because I think we need to do more to bring people into the DeFi space.
Absolutely.
I think that I think it's one of the hidden gems. People need to understand how DeFi works, just like they understood how Bitcoin worked in the beginning, if we're going to really power this revolution. And that's why people like you and people like me doing this are so important. So Narissa, we'll get hold of you. We will get you back on the show. But now it's time for us to move on. We have to move on to one of the biggest stories of the week, in my opinion. And the reason why I think it is one of the biggest stories of the week is not because it's of what it's doing, but because of the people involved. Now, 1 o'clock in the morning in Korea, in New York, it's probably around 11 a.m. EST. And we've got Do Kwon, who's one of the founders of TERRA. TERRA were the guys that launched the stablecoin, or the Luna TERRA stablecoin. It is probably one of the most used crypto apps in the world. Am I right?
Well, that is correct. So we run one of the most popular payment apps in crypto.
So for those of you who don't know Do and don't know what these guys are up to, about 2 years ago, we went to Korea on my CNBC show, and we met these guys in the Hashed Accelerator. Hashed is one of the big VCs, big accelerator companies in Korea. Let's have a look at what we saw.
The Korean blockchain scene is humming with activity. There are projects happening everywhere. But there seems to be one hub where all the big projects are coming out of. That hub is called Hashed. And I decided to take a closer look at what they're doing. Let's go.
Gentlemen, we've been in Korea for a few days. We've been in the crypto scene, and all roads seem to lead back to Hashed.
So if we can back them with our stability funds, and if they can pay a small transaction fee, we think it's going to be a win-win for everyone involved.
I think I just got it. So you can apply this to any type of token.
Correct.
If any time a token is transacted, a percentage of the transaction fee goes into a Luna.
Yes.
Then you can create a stable coin out of any token.
Correct. Yes. And all the coins that are in the ecosystem are helping each other in the stability.
That's going to be the smartest concept I've heard of in 2018. Wow.
So that was 2018. You've since launched. Tell us a little bit about Luna and TERRA. Tell us about the stablecoin. Tell us about adoption. But then really what I want to talk about is I want to talk about what you guys are up to. And specifically, I want to talk about the new Mirror protocol.
Sure. So we're TERRA Money. So we operate a set of stablecoins that are pegged to various different fiat currencies. So we have TERRA KRW that is pegged to the won, TERRA USD that's pegged to the dollar, TERRA SDR that's pegged to the IMF SDR, and then so on and so forth. So up until today, TERRA was best known for perhaps running, payment services in Asia using these stablecoins. So, for example, we founded Chai, which is an e-wallet in Korea, 18 months ago. And then in those 18 months, Chai has accumulated about 2.4 million active users, and then is doing about $1.2 billion in annualized transaction volume in retail payments. And
2.4 million active users.
Yes, purchasing. So, which means that a user has made a purchase using the platform. So in terms of daily active, we're doing anywhere between 70,000 to 100,000 users on a daily basis. So users that are coming into the platform and then making a purchase. So in terms of app activity, which is what most startups and companies signal, it's a little bit higher. So somewhere around 160 to 180,000 users per day.
Okay.
Yeah.
Now, a lot of our viewers are confused between TERRA and Luna. We get them asking us questions, what do I buy? Do I buy TERRA? Do I buy Luna? Maybe just make the differentiation or distinguish between the two tokens. Which is the one that you're actually buying, the one that has a $230 million market cap?
Sure. So TERRA isn't an investment vehicle. It's a stablecoin. So unless you are looking to get exposure to a different type of FX than the dollar, which is honestly not a bad idea right now, you would invest in Terra. You'd invest in Luna, which is an ecosystem token. So how Luna works is pretty simple. So every time that a Terra stablecoin switches hands, a small transaction fee, so let's say 0.5%, is paid to be given out as staking rewards to people that stake Luna in the ecosystem. So Luna is a staking token. So basically,
I remember when I understood that concept, it was almost like it was the Visa of the transactions happening on the US dollars. They would take a fee on each payment that was made. And if I remember correctly, the fee is not fixed. The fee fluctuates to try and keep the coin stable, right?
Right. So the transaction fee oscillates anywhere between 0.1% to 1%, depending on what the economic situations of the stablecoin are. So basically, the remunerative properties of Luna change a little bit depending on how the stability profile of the coin is. But basically, I think you nailed it right on the head, that we like to think of it as the Terra ecosystem forming some sort of decentralized Visa, with Luna being an equity token in that ecosystem, and then the rewards from that payment ecosystem being paid out to Luna with 100% propensity to dividend.
So the more transactions that happen on the network, the more valuable, the more fees are being collected, and therefore the more valuable the Luna token is, right?
That is correct.
Alrighty, and you're saying that right now you're doing an annualized turnover of what were the numbers?
Around $1.2 billion for one of our payment companies, which is Chai.
One of your payment companies through the Chai app is doing about $1.2 billion. And people who are holding the TERRA, the Luna token, can stake this to become a validator on the network, and they can do this using amongst other platforms, they can do this using your station application, right?
Correct.
What kind of yields would they earn on their Luna tokens for becoming a validator?
I think we're seeing about 10% annualized, with
and
rewards paid out in a stablecoin.
And what are they earning these tokens? Are they earning this 10% in other Luna tokens? What's the mix?
Yeah, so what's unique about Terra is that what's unique about Luna is that there's no inflation. So there's no new tokens being printed to give you staking returns. 100% of your staking returns are being paid out in transaction fees over various payment services, and it's denominated in stablecoin.
So it really is like Visa. I mean, it's Visa not issuing more equity. The equity can trade hands, but ultimately it's profiting from the number of transactions on the network. And what you said is, at the beginning, you said that you are doing multiple Terra coins, which means that as you keep growing your number of coins and your number of markets, so these equity holders, or these not really equity holders, but these validators or Luna holders will actually start making more money.
Yes.
Alrighty, let's talk about the big news, which is 24-hour trading of synthetic versions or synthetic stocks like Tesla and Apple. Tell us about this announcement. Tell us why it's so relevant, and tell us how Luna token holders benefit from this.
Yeah, so this last week we launched a synthetics protocol called Mirror. So Mirror is a protocol that allows the issuance of synthetic tokens that that follow the price of anything, but it has a particular focus initially on U.S. equities. So, for example, there is the Apple token, which follows the unit price of a Apple stock. There's Google, Amazon, Netflix, and then so on and so forth. So the motivation for us for starting this protocol is a couple of layers. So number one, it's actually really difficult to get quality access to US equities as an asset class in lots of places outside of the United States. And the reasons for that, comes in a couple of layers. It could be things like adversarial or protectionist local regulations. So, for example, a lot of local governments don't want their citizens primarily trading U.S. equities because they like to hold a lot of capital in local equities markets. It could be things like adverse trading hours. So for example, if you want to trade US equities in Asia, markets open at 11 p.m. and they close super early in the morning. So for lots of different reasons, it's really helpful to have access to a synthetic that tracks the price of these assets, tradable 24/7, allows fractional ownership on places like Uniswap and TerraSwap, and governed in a decentralized fashion by a large set of token holders.
All right, so a few things that I want to dig into. I think the first thing is, when you talk about a synthetic asset, you're talking about an asset that moves like the actual underlying asset, one for one. Do you hold a Apple stock for every Apple stock that you guys sell or track on the platform?
No, we do not. So the protocol is entirely decentralized. So how this works is, it's actually quite similar to MakerDAO. So a user locks up, let's say, $150 of TERRA stablecoin, and then he is able to mint, let's say, $100 of a mirror synthetic token, let's say something that tracks the price of an Apple token. And then once the price of Apple surpasses some threshold, you need to either add more money, add more TERRA stablecoins into your position, or you suffer, a margin call. So which helps keep the system solvent. So the easiest way to understand it is that if you look at MakerDAO, you have multiple volatile collateral that are tracking the price of various Ethereum assets, like for example, ETH or some other things. And then you have one stable synthetic, which is the DAI stablecoin. So in Mirror's case, you have one stable collateral, which is TERRA USD, and then inversely, you have multiple different volatile synthetics that each track the price of various different real world assets. There's no centralized counterparty that's holding stocks or anything else for that matter. And everything happens via a decentralized system of liquidations, margin calls, and funding using TERRA stablecoins.
And the more UST pairs that are traded, the more transaction happen on TERRA USD, the more the Luna holders get transaction fees, and so the ecosystem grows, right?
Yes, that's correct.
Okay, now I'm looking at the screen here, and I'm looking at it. It looks very much like a yield farm where it's almost asking you to stake. Let's look at this one, M Tesla UST LP. Tell me what this transaction is actually about. If I want to get involved in this M Tesla UST and earn an APR of 538% at the moment, tell me what I'm actually doing here.
Sure. So this is pretty similar to any sort of standard yield farming scheme. You buy X value of M Tesla tokens, so tokens that track the price of Tesla, and then let's say X value of TERRA USD, and then you provide that into a liquidity pool on TerraSwap in order to be eligible for yield farming of the MIR governance token, which is sort of like the ecosystem token in the Mirror protocol. So one thing of note that's kind of interesting is that if you do yield farming on most other DeFi protocols, the possibility that you would suffer impermanent loss is very, very high.
I was about to ask, is there impermanent loss here? Because I mean, effectively, you are staking a pair. You're staking a USD pair versus the M Tesla pair.
Sure. So yes, there is still the possibility of impermanent loss because M Tesla or like MSFT is volatile like anything else. But like the odds of you suffering that is much, much lower because, for example, if you do yield farming on SushiSwap, for instance, like the Sushi token is extremely volatile. But like arguably like Microsoft is much more stable than what you would get from random food coins in DeFi. So from, let's say, a risk reward profile, if you're able to get 540% yield by providing liquidity on Microsoft, it's a much, much better bet, in my opinion.
It is, and also you're staking it against a US dollar pair, which means that you don't have a situation where you're staking it like against the ETH pair, where ETH can go up and the other one can go down. In which case, you really start suffering the impermanent loss. All right, so this is, I guess, the big news for you guys. How long have you guys been working on this synthetics protocol, on this mirror protocol, which is a synthetic asset trading protocol?
Yeah, so in some form, we've been working on it since March. So that's about 9 months in for us. We've had, like a section of the company been working on this for a while. Quite excited to kick this off. We have, a lot of future plans on additional features or products that can be built on top of Mirror Protocol. So it's quite exciting. Yeah.
Tell us a little bit about what the future looks like, if you can. I know that there's a lot of competitors who want to know what you guys are doing. I guess this one caught a lot of them by surprise, or certainly that's what I picked up from the press. Tell us about what else you guys are doing on this specific Mirror protocol, if you can.
Sure. So what's actually most exciting for Mirror isn't that you can buy equities tokens, because I think that feature is pretty easy to copy. But I think where the network effects comes from is if you compose this into lots of different use cases. And that's really where the beauty of crypto applications comes into play. So one of the things that's possible is we also have another application called Anchor, for instance, which is a yield protocol. So for example, if the collateral for Mirror is not just TERRA USD, but it could be like a deposit account on Anchor, or like an easier form to understand could be Compound, then in that case, the yield that is collected by the collateral could be conferred to the synthetics holder in the form of yield. So in some sense, like you could have a use case where a user can hold Apple tokens or Tesla tokens or Microsoft tokens, and then earn, let's say, a 7 to 8% yield on in the form of dividends on those synthetics, much better than what you could get from traditional equities. So you start to unlock these different use cases using composability of different crypto asset classes that you simply couldn't get in traditional finance.
So the chats are going crazy here. People saying that Mirror looks like one of the best projects released recently, except for an issue on Uniswap. We do have a question, and the question comes from FUD0. FUD0 is asking, Crypto Banter, does TERRA see a future where stablecoins will be used in the gaming adoption for microtransactions?
Well, would you say the question is referring to microtransactions specifically for Mirror, or would that be?
I think it talks about general banking, general gaming adoption, whether people will start using TERRA for gaming.
Yeah, so like interestingly, Korea is like a big country for gaming. I think some people might be aware of that. Yes.
#1 country in the world for gaming.
Yeah, and then interestingly, a lot of people think that the name TERRA comes from Latin for Earth, but really it comes from Terran in StarCraft, which I'm a huge fan of. So yeah, in terms of gaming, we're huge fans. Another interesting point is that the leadership and of the top 4 gaming companies in Korea are all investors in Luna from like a very early stage. So we do have deep roots there. What I would say though is that in terms of gaming, so sort of the use cases that you need to unlock first is sort of regulation. So one of the reasons why a lot of gaming companies feel a little bit difficult to touch crypto is because they already face a lot of different regulations regarding spending cash for like buying items or things like that. So like if you mix gaming and crypto, then regulators are especially a little bit more sensitive. But I think once you are able to pass the regulatory hurdle and to enter the mainstream, I think a lot of interesting things are indeed possible.
All right, look, we are running out of time. We do have one more question around Mirror Protocol specifically. How was Mirror Protocol funded? Did you guys do a token sale around Mirror? Were you pre-selling Mirror tokens before this actual mining period started?
Yeah, so Mirror, if you look at the token distribution for Mirror, it's available in the docs section in the website. So in terms of a pre-mine, there was a section of the tokens that was distributed to uni holders. You can still claim that today. You can go to eth.mirror.finance/airdrop to claim tokens if you are a uni holder. Or if you are a Luna holder, you can go to terra.mirror.finance/airdrop.
Hold on one second. So you're saying anybody that holds Uniswap tokens, uni tokens, can claim Mirror tokens?
Yes. So to reference how our 2 pre-mine tranches was motivated, so the reason why we gave out a portion of the airdrop to uni holders is because we find that people that received uni tokens and then still held it are some of the strongest believers and users in DeFi. So it's more of a customer acquisition strategy for us. Yes, so we wanted the strongest believers in DeFi to come out and come and check out the Mirror protocol for use and governance in order to bootstrap the initial momentum around the protocol. And we set aside like an allocation for Luna holders in order to align incentives with the network security of the base layer in which the Mirror protocol is hosted.
All right, so I want you to give those addresses because I know we've got a lot of people watching the show that are Luna holders, and I know we've got a lot of people watching the show that are Uniswap holders. You can apparently claim free Mirror tokens. Yes, guys, free Mirror tokens. And for those of you who are wondering, the Mirror token is currently trading at $1.31. I was watching it on the weekend as it hovered around $2, but again at $1.31. Free tokens, free tokens, free tokens, free tokens, free tokens. If we were holding Uniswap, where do we get our tokens?
You can go to eth.mirror.finance/airdrop.
eth.mirror.finance. If my producers are still awake, if they're still listening, drop that at the bottom. And if you are Luna holders, where should we get our tokens as Luna holders?
That would be terra.mirror.finance/airdrop.
Amazing. Doe, it's been a great pleasure having you. I'm so glad we did this. I know it's 1 o'clock in the morning for you at the moment.
It's actually 2.
2 o'clock in the morning. Guys, come on, smash the like button and smash the subscribe button for one of the best projects out there. One of the best projects out there in Korea. Stayed up till 2 o'clock in the morning to bring you guys amazing information, and it has been amazing. I've certainly enjoyed catching up with Doe to see where these guys have been up to since we discovered them and exposed them to the West when we were at CNBC. Doe, it's been an absolute pleasure having you on the show. I'd love to do it again. Keep us updated what you guys are doing at Mirror Protocol. Keep us updated. Stay in touch with us.
Yeah, sounds good. Will do.
Thank you, my friend. Be well. And
Bye-bye.
That's all we have time for today. It's been another jam-packed, amazing show, amazing guests, talking DeFi, talking Bitcoin, bringing in amazing projects, educating you guys, and giving you guys a platform to talk crypto. Use the platform, guys. We banter on Twitter and on Telegram all day long. Let's bring that to Crypto Banter. Let's share information with one another. Let's get this going. Let's build you guys a station that you can listen to at your desks. I know that I needed it, and that's why I built CryptoBanter.com. It's been amazing being with you guys today. I'll see you again, same time, same place tomorrow. Until then, if you're trading, trade well, my friends. And if you're farming, hope you make a lot of yield.
Crypto Banter is a social podcast for entertainment purposes only. All opinions expressed by the hosts, guests, and callers should not be construed as financial advice. Views expressed by guests and hosts do not reflect the views of the station. Listeners are encouraged to do their own research.